Lesson 1. Basics of Capital Market. 1. Regulatory Framework. 1. Definition. Refers to the set of laws, rules, and authorities governing India's financial and capital markets. 2. Objective. To ensure transparency, investor protection, fair trading, and prevention of frauds. 3. Main regulators. SEBI. Regulates securities market. RBI. Regulates banking and money market. IRDAI. Regulates insurance sector. PFRDA. Regulates pension funds. 4. Key legislations. SEBI Act, 1992. Securities Contracts Regulation Act, 1956. Depositories Act, 1996. Companies Act, 2013. 5. Example. SEBI prohibits insider trading and regulates IPOs. 2. Financial system in India. 1. Definition. A framework for mobilizing savings and channeling them into productive investments. 2. Components. Financial institutions, banks, NBFCs. Financial markets, money, capital, forex. Financial instruments, shares, bonds, derivatives. Financial services, brokerage, underwriting. 3. Functions. Allocation of resources, risk transfer, liquidity creation. 4. Example. Banks lend to industries. Stock markets raise long-term funds. 5. Regulators. RBI, SEBI, IRDAI, PFRDA. 3. Financial markets in India. 1. Definition. Organized platforms for trading financial instruments. 2. Types. Money market. Short-term funds less than 1 year. Capital market. Long-term funds more than 1 year. 3. Examples. Money market, right pointing arrow, treasury bills, commercial paper. Capital market, right pointing arrow, shares, debentures. 4. Role. Links savers with investors, ensuring efficient capital flow. 4. Functions of financial market. 1. Mobilization of savings. Converts household savings into investments. 2. Price discovery. Demand and supply determine securities prices. 3. Liquidity. Allows easy buying selling of financial assets. 4. Risk sharing. Investors can diversify portfolios. 5. Efficient allocation. Directs funds to most productive areas. 5. Money market. 1. Definition. Deals in short-term, highly liquid instruments, maturity less than 1 year. 2. Instruments. Treasury bills, certificates of deposit, CDs, commercial papers, CPs, call money. 3. Participants. RBI, banks, mutual funds, corporates. 4. Objective. Maintain liquidity and meet short-term financing needs. 5. Example. Company issues CP for 90 days to meet working capital needs. 6. Capital market. 1. Definition. Market for long-term funds, maturity greater than 1 year. 2. Components. Primary market. New issues, IPOs. Secondary market. Trading existing securities, stock exchanges. 3. Participants. Individuals, FIIs, mutual funds, corporates. 4. Example. Reliance issues shares to public via IPO. 7. Need for capital market. 1. To mobilize long-term funds for industrial and infrastructural development. 2. To provide liquidity through stock exchanges. 3. To promote economic growth by channeling savings into investment. To promote economic growth by channeling savings into investment. 4. To encourage entrepreneurship via venture capital and equity financing. 5. To attract foreign investment, FPI, FDI. 8. Functions of the capital market. 1. Raising long-term capital. For corporates, government. 2. Liquidity creation. Through stock market trading. 3. Capital formation. By converting savings into investment. 4. Price discovery. Market determines security prices. 5. Investor protection. Through SEBI regulation and disclosure norms. 9. Securities market. 1. Definition. A component of capital market where securities, shares, bonds, etc. are issued and traded. 2. Segments. Primary market. New issues by companies. Secondary market. Trading of listed securities. 3. Key institutions. Stock exchanges, BSE, NSE, depositories, NSDL, CDSL. 4. Example. IPO of LIC primary. Trading of TCS shares secondary. 10. Functions of securities market. 1. Mobilize funds. Facilitates capital raising for businesses. 2. Liquidity and transferability. Investors can exit investments. 3. Efficient price mechanism. Reflects company performance. 4. Promotes savings and investment culture. 5. Ensures transparency and investor protection. 11. Regulatory framework for securities market includes 4 main legislations. A. The SEBI Act, 1992. 1. Establishes Securities and Exchange Board of India, SEBI. 2. Objective. Protect investors, promote fair trading, and regulate intermediaries. 3. Powers. Registration, inspection, prohibition of insider trading, penalties. 4. Example. SEBI bans entities for fraudulent IPOs. B. The Securities Contracts Regulation Act, 1956. 1. Governs stock exchanges and contracts in securities. 2. Defines securities and regulates trading. 3. Provides for recognition of stock exchanges by SEBI. 4. Prevents undesirable speculation. C. The Depositories Act, 1996. 1. Introduced dematerialization of securities. 2. Establishes depositories and SDL, CDSL. 3. Enables electronic transfer and ownership of shares. 4. Reduces paper risk and fraud. D. The Companies Act, 2013 1. Regulates issue, allotment, and transfer of securities. 2. Governs corporate governance and disclosures. 3. Key sections. Section 23. 42. Issue of securities. Section 124. 127. Dividend and Investor Education Fund. 4. Empowers SEBI for listed companies. 12. Need for regulators in capital market. 1. Prevent fraud and unfair trade practices. 2. Maintain investor confidence. 3. Ensure transparency and fair dealing. 4. Regulate intermediaries, brokers, depositories. 5. Example. SEBI action against Sahara for illegal fundraising. 13. SEBI, the Capital Markets Regulator. 1. Established under SEBI Act, 1992. 2. Functions. Regulatory intermediary registration. Developmental education, reforms. Protective prohibit insider trading. 3. Structure. Chairman plus members appointed by government. 4. Powers. Investigate, penalize, issue circulars, regulate exchanges. 5. Example. SEBI regulates IPO process and mutual fund norms. 14. Participants of capital market includes different categories of investors and funds. A. Qualified institutional buyers QIBs. 1. Institutional investors with financial expertise. 2. Includes mutual funds, banks, insurance companies, PFs. 3. Eligible to participate in IPOs under QIB quota 50%. 4. Example. LIC investing in IPOs as QIB. B. Foreign portfolio investor FPI. 1. Non-resident investors registered with SEBI to invest in Indian securities. 2. Invest in equity, debt, derivatives. 3. Categorized based on risk category I, 2, 3, 4. Regulated under SEBI FPI regulations, 2019. C. Alternative investment funds AIFs. 1. Privately pooled investment vehicles for sophisticated investors. 2. Categories. Cat I. Venture capital, social venture funds. Cat 2. Private equity, debt funds. Cat 3. Hedge funds. 3. Regulated under SEBI AIF regulations, 2012. D. Venture capital. 1. Investment in early stage, high potential startups. 2. Involves equity participation and mentoring. 3. Example. Sequoia Capital investing in Indian startups. E. Areas of investment. 1. Startups, technology, renewable energy, manufacturing. 2. Depends on risk profile and regulatory permission. F. Private equity. 1. Investment in unlisted companies to provide growth capital. 2. Involves long-term, active management participation. 3. Example. Blackstone's investment in IT companies. G. Types of private equity. 1. Buyouts. Acquiring majority stake. 2. Growth capital. For expansion. 3. Distressed investment. Turnaround of loss-making companies. 4. Mezzanine financing. Hybrid of debt and equity. H. Angel fund. 1. High net worth individuals funding startups at early stage. 2. Usually before venture capital. 3. Example. Angel list India investors. I. Anchor investors. 1. Institutional investors allotted shares before IPO opens. 2. Help stabilize demand and confidence. 3. Must hold shares for at least 30 days. 4. Example. Mutual funds acting as anchors in Zomato IPO. J. High net worth individuals HNIs. 1. Individuals investing 2 lakh rupees or more in IPOs. 2. Participate under non-institutional investors NI category. 3. Example. Wealthy businesspersons investing in IPOs. K. Pension fund. 1. Long-term institutional investors managing retirement savings. 2. Example. EPFO, NPS funds. 3. Regulated by PFRDA. 15. Legislations. 1. SEBI Act, 1992. 2. SCR Act, 1956. 3. Depositories Act, 1996. 4. Companies Act, 2013. 5. FEMA, 1999 for foreign investors. 6. Prevention of Money Laundering Act, 2002. 7. Indian Stamp Act, 1899 for transfer of securities. 16. Capital market instruments. Different financial instruments used to raise funds. A. Equity shares. 1. Represent ownership in a company. 2. Holders get voting rights and dividends. 3. Residual claim in liquidation. 4. Example. Shares of Infosys Limited. B. Shares with differential voting rights DVRs. 1. Shares that provide different voting or dividend rights. 2. Example. Tata Motors DVRs. Lower voting, higher dividends. 3. Encourages founders to retain control while raising capital. C. Preference shares. 1. Priority in dividend and repayment over equity holders. 2. Types. Cumulative, non-cumulative, redeemable or redeemable, participating, non-participating. 3. Example. 8% redeemable preference shares. D. Debentures. 1. Long-term debt instruments acknowledging loan to company. 2. Holder equals creditor, not owner. 3. Types. Convertible, non-convertible, secured, unsecured. 4. Example. NCDs issued by NBFCs. E. Categories of debentures. Fully convertible FCD. Partly convertible PCD. Non-convertible NCD. F. Optionally fully convertible debenture OFCD. 1. Holder may choose to convert into shares. 2. Example. Sahara OFCD case 2012. Led to SEBI action. G. Bonds. 1. Issued by governments or corporations. 2. Fixed interest and maturity. 3. Example. Government of India 7.5% bonds. H. Characteristics of a bond. 1. Face value, coupon rate, maturity, yield, market price. 2. Generally less risky than shares. I. Types of bond. Fixed rate. Floating rate. Zero coupon. Convertible. Inflation-linked. J. Foreign currency convertible bonds FCCBs 1. Issued in foreign currency. 2. Convertible into shares at a later date. 3. Example. Infosys FCCB issued to foreign investors. K. Foreign currency exchangeable bonds FCEBs 1. Convertible into shares of a different company group company. 2. Example. Tata Sons FCEBs exchangeable for Tata Motors shares. L. Indian Depository Receipts IDRs 1. Foreign companies issue shares in India in rupees. 2. Example. Standard Chartered 2010 Indonesian rupiahs. M. Derivatives 1. Financial contracts based on underlying assets shares, index, currency. 2. Types. Futures, options, forwards, swaps. 3. Example. Nifty futures. N. Warrant 1. Right not obligation to buy shares at a specific price before expiry. 2. Usually issued with debt instruments. O. Real estate investment trusts rights 1. Pooled investment in real estate assets. 2. Listed on stock exchange. 3. Example. Embassy office parks right. P. Infrastructure investment trusts INVITs 1. Invest in infrastructure projects roads, power, etc. 2. Example. IRB and VIT fund. Q. Securitized debt instruments 1. Pooling financial assets like loans and converting into tradable securities. 2. Example. Mortgage-backed securities MBS. R. Municipal bonds 1. Issued by urban local bodies for financing public projects. 2. Example. Pune Municipal Corporation Bonds 2017. Additional tip for CS exams. Always quote relevant acts and sections. Include recent SEBI circulars or reforms. Use real Indian examples Zomato IPO, LIC listing, etc. Would you like me to prepare lesson 1 in tabular format column-wise? Subheading. Key points. Example. Law reference. Ideal for CS exam revision notes. Lesson 2. Secondary market in India. 1. Regulatory framework 1. The secondary market is the platform where already issued securities are traded. 2. Regulation. Governed mainly by SEBI Act, 1992. Securities Contracts Regulation Act, 1956 SCRA. Depositories Act, 1996. Companies Act, 2013-3. Key regulators. SEBI Primary Regulator. Stock exchanges self-regulatory organizations. Clearing corporations 4. Objectives. Protect investors, prevent fraud, ensure fair trading and transparency. 5. Example. SEBI issues circulars governing margin requirements and insider trading. 2. Development of stock market in India 1. India's first stock exchange, Bombay Stock Exchange BSE in 1875. 2. NSE National Stock Exchange established in 1992 introduced screen-based electronic trading. 3. Dematerialization started in 1996 with NSDL, followed by CDSL. 4. Derivatives trading began in 2000. 5. SEBI reforms improved governance, transparency, and investor protection. 6. Example. Transition from open outcry to full electronic trading. 3. Stock market and its operation 1. Stock market equals platform where securities are bought sold after issue. 2. Operation flow. Investor right pointing arrow, broker right pointing arrow, stock exchange right pointing arrow, clearing corporation right pointing arrow, depository. 3. Trading mechanism. Electronic order matching via terminals. 4. Settlement. T+1 rolling basis trade day plus 1 working day. 5. Example. Buying Infosys shares via Zerodha happens through NSE electronic platform. 4. Stock exchange 1. A stock exchange is a marketplace for trading securities. 2. Defined under Section 2J of SCRA, 1956. 3. Needs recognition by SEBI. 4. Examples. BSE, NSE, MCXSX. 5. Functions. Provides liquidity, price discovery, and transparency. 6. Demutualization. Separation of ownership and trading rights as per SEBI guidelines. 5. Role of stock exchanges 1. Liquidity provider. Enables buying selling anytime. 2. Price discovery. Market-driven price formation. 3. Capital formation. Encourages savings right pointing arrow investments. 4. Investor protection. Monitors brokers and trades. 5. Information dissemination. Publishes company data and prices. 6. Example. BSE disseminates real-time prices via Bolt system. 6. Indian stock exchanges 1. Major exchanges. NSE, BSE, Calcutta, Madras, Ahmedabad, etc. 2. Regional exchanges have declined due to electronic centralization. 3. NSE is India's largest exchange index. Nifty 50. 4. BSE, oldest exchange index. Sensex. 5. Example. BSE and NSE together handle over 99% of total volume. 7. Regulatory framework of secondary market 1. SEBI Stockbroker Regulations, 1992-2. SEBI Listing Obligations and Disclosure Requirements Regulations, 2015 Lauder 3. SEBI Prohibition of Insider Trading Regulations, 2015-4. SEBI Prohibition of Fraudulent and Unfair Trade Practices Regulations, 2003-5. Stock Exchange Bylaws and Clearing Rules 6. Depository Rules under Depositories Act, 1996. 8. Trading Mechanism 1. Order Matching System. Fully Automated NSE's NEAT, BSE's Bolt. 2. Types of orders. Market order, limit order, stop loss, IOC. 3. Trading hours. 9. 15 a.m. to 3:30 p.m. 4. Settlement. T+1 rolling. 5. Clearing corporation. Ensures counterparty guarantee. 6. Example. Buy order at 1000 rupees matches sell order at 1000 rupees automatically. 9. Types of securities. 1. Equity shares. Ownership. 2. Preference shares. Fixed dividend priority. 3. Debentures bonds. Fixed interest, debt instruments. 4. Mutual fund units. Collective investment. 5. Derivatives. Futures, options. 6. ETF, right, INVIT. Hybrid investment vehicles. 10. Market participants. 1. Investors. Retail, institutional, HNI. 2. Stockbrokers and sub-brokers. Execute trades. 3. Depositories and SDLCDSL. Hold securities in DEMA form. 4. Clearing members and custodians. Handle settlement. 5. FIIs FPIs. Foreign investors. 6. Market makers. Maintain liquidity. 7. Example. Zerodha broker, HDFC bank custodian. 11. Exchange traded funds ETFs. 1. Hybrid of mutual funds and shares. Traded on stock exchanges. 2. Represent a basket of securities like an index or commodity. 3. Example. Nippon India Nifty 50 ETF, gold ETF. 4. Benefits. Low cost, diversification, liquidity. 5. Regulated by SEBI Mutual Fund Regulations, 1996. 12. Derivatives. 1. Financial instruments deriving value from underlying asset shares, index, currency. 2. Purpose. Hedging, speculation, arbitrage. 3. Types. Futures, options, swaps. 4. Example. Nifty futures, Reliance options. 5. Regulation. SEBI Derivative Regulations, 2000. 13. Future. 1. Standardized contract to buy sell an asset at a future date and price. 2. Traded on exchange. Right pointing arrow ensures counterparty security. 3. Example. Nifty January futures at 23,000 rupees. 4. Used for hedging price risk. 5. Settlement. Cash or delivery on expiry. 14. Options. 1. Contract giving right but not obligation to buy call or sell put an asset at specific price. 2. Buyer pays premium. 3. Types. Call option. Right to buy. Put option. Right to sell. 4. Example. Call option of TCS at 3,800 rupees expiring next month. 5. Regulated under SEBI Derivative Regulations. 15. Rights entitlements. 1. Rights issue equals existing shareholders offered new shares. 2. Rights entitlement RE. Temporary security representing right to subscribe. 3. Tradable on stock exchange. 4. Example. Reliance rights issue real RE. 5. Regulated under SEBI issue of capital and disclosure requirements regulations, 2018. 16. Options available to eligible equity shareholder in rights issue. 1. Subscribe fully to rights shares. 2. Subscribe partly and renounce rest. 3. Renounce entire entitlement to another person. 4. Ignore the offer rights lapse. 5. Example. Shareholder sells rights on NSE as Reliance RE. 17. Renunciation of rights entitlements. 1. Transfer sale of rights entitlement to another investor. 2. Allowed via trading platform before issue closes. 3. Mode. Through Demat account. 4. Benefit. Allows liquidity and flexibility. 5. Example. Shareholder sells 50 res to another investor on NSE. 18. Trading platform in India. 1. NSE. National Stock Exchange. System. NEET National Exchange for Automated Trading. Index. Nifty 2. BSE. Bombay Stock Exchange. System. Bolt. Index. Sensex 3. SME platforms. NSE Emerge, BSE SME. 4. Commodity and currency platforms. MCX, NCDX. 5. Example. SME startup lists on BSE SME platform. 19. Margins. 1. Definition. Amount required to cover potential losses before trade settlement. 2. Types. Initial, maintenance, mark-to-market, exposure margin. 3. Objective. Prevent defaults. 4. Collected by clearing corporation via broker. 5. Example. For futures, trader deposits 10% margin upfront. 20. Book closure and record date. 1. Book closure. Period when company closes register for updating shareholder list. 2. Record date. Cutoff date to determine eligible shareholders for dividend rights. 3. Example. Record date for dividend equals the 15th of July. Right pointing arrow only shareholders before that date receive dividend. 21. Block deal. 1. Transaction of shares is greater than or equal to 10 crore rupees or 5 lakh shares executed in a single block. 2. Conducted in a special trading window during first 15 minutes. 3. Example. Mutual fund sells 100 crore rupees worth of Infosys shares. 22. Bulk deal. 1. Single transaction is greater than or equal to 0.5% of company's equity on exchange. 2. Reported to exchange immediately. 3. Example. HDFC AMC buys 0.6% of Axis Bank shares in one trade. 23. Stock Market Index. 1. Statistical measure of performance of select stocks. 2. Indicates overall market trend. 3. Examples. Sensex, Nifty 50, Bank Nifty. 4. Used for benchmarking mutual funds and portfolio returns. 24. Basis of Sensex. 1. Index of 30 stocks representing major sectors on BSE. 2. Base year. 1978. 79 equals 100. 3. Method. Free float market capitalization weighted. 4. Example. Reliance, TCS, HDFC Bank are part of Sensex. 25. Nifty 1. NSE's benchmark index of 50 major stocks. 2. Base year. 1995 equals 1000. 3. Represents 13 sectors of economy. 4. Example, Infosys, Assisi Bank, HUL, Tata Steel included. 26. Basics of investing. A guidance to budding investors. 1. Understand risk appetite. Equity equals high risk, bonds equals low risk. 2. Diversify portfolio. 3. Avoid herd mentality. 4. Check company fundamentals. 5. Use registered intermediaries only. 6. Long-term view gives better returns. 7. Example, investing via SIPs in index funds for 5+ years. 27. Clearing corporation. 1. Independent entity ensuring settlement of trades. 2. Functions, clearing, settlement, risk management. 3. Examples, NSCCL. For NSE. ICCL. For BSE. 4. Guarantees settlement even if one party defaults. 28. Role of clearing corporation. 1. Acts as counterparty to every trade novation. 2. Ensures timely delivery of funds securities. 3. Collects margins and collateral. 4. Conducts risk monitoring and netting of trades. 5. Example, NSCCL guarantees settlement on T+1 basis. 29. Market surveillance. 1. Continuous monitoring of market activity to detect anomalies. 2. Prevents insider trading, circular trading, price manipulation. 3. Tools, alerts, circuit filters, trade pattern analysis. 4. Managed by stock exchanges and SEBI. 5. Example, SEBI suspending trading of penny stocks on abnormal volume spikes. 30. Risk management in secondary market. 1. Margins, to cover exposure. 2. Position limits, to prevent overleverage. 3. Circuit breakers, temporary halt on sharp price moves. 4. Surveillance measures. 5. Settlement guarantee fund. 6. Example, 10% lower circuit applied on Nifty in case of crash. 31. Impact of various policies on stock markets. Government and monetary policies strongly influence investor behavior and liquidity. A. Fed policy. U.S. Federal Reserve. 1. Global liquidity depends on U.S. interest rates. 2. Rate hikes. Right pointing arrow. Capital outflows from emerging markets. 3. Rate cuts. Right pointing arrow. Inflows to Indian markets. 4. Example, 2022 Fed hike led to FPI withdrawals from India. B. Credit policy of RBI. 1. Determines domestic interest rates and money supply. 2. Repo rate down pointing arrow. Right pointing arrow. Cheaper loans. Right pointing arrow. Bullish stock market. 3. Repo rate up pointing arrow. Right pointing arrow. Higher borrowing cost. Right pointing arrow. Bearish market. 4. Example, RBI's repo cut during COVID boosted Sensex. C. Inflation index. 1. High inflation reduces purchasing power. Right pointing arrow. Lowers market sentiment. 2. Moderate inflation supports earnings growth. 3. Example, CPI inflation at 6% may reduce bond demand. D. Impact of policies on Indian stock market. 1. Expansionary policy. Right pointing arrow. Bullish sentiment. 2. Contractionary policy. Right pointing arrow. Cautious sentiment. 3. Other influences, fiscal deficit, budget announcements, taxation policy. 4. Example, union budget announcements often drive Sensex volatility. CS exam tip, always quote acts plus SEBI regulation names plus real examples. Focus on roles of SEBI, stock exchanges, and clearing corporations. High weightage area. Include current affairs linkage like T+1 settlement, margin rule changes. Lesson 3. Securities Contracts Regulation ACT, 1956 SCRA. Regulatory Framework. 1. Primary law governing stock exchanges and securities trading in India. 2. Administered by the Ministry of Finance and regulated by SEBI post-1992 amendments. 3. Provides a legal structure for recognition, regulation, and supervision of stock exchanges. 4. Ensures transparency, fair dealing, and investor protection in securities contracts. 5. Supported by Securities Contracts Regulation Rules, 1957 SCRR. SEBI Act, 1992. Companies Act, 2013. Example. The Bombay Stock Exchange BSE operates under recognition granted under Section 4 of SCRA. Introduction and Genesis. 1. Before 1956, there was no uniform law to regulate stock exchanges. 2. Post-independence, rampant malpractices led to need for regulation. 3. Government enacted SCRA, 1956 to ensure fair functioning of stock exchanges. 4. Enforced from the 20th of February 1957. 5. Objective. To regulate securities contracts and prevent undesirable transactions. Example. Insider trading and price rigging were unchecked before SCRA. SCRA. A bird's eye view. 1. Chapter 1. Preliminary definitions. 2. Chapter 2. Recognition of stock exchanges. 3. Chapter 3. Contracts and their regulation. 4. Chapter 4. Powers of the central government. 5. Chapter 5. Offenses, penalties, appeals, etc. 6. Applies to securities markets across India. 7. Provides for listing, recognition, and prohibition of undesirable contracts. Non-applicability. Section 28 SCRA does not apply to 1. Government securities. 2. Transactions by the Reserve Bank of India. 3. Certain contracts notified by the central government. 4. Certain private placement contracts outside public stock exchanges. 5. Agricultural commodity contracts, regulated separately under Forward Contracts Act. Key definitions. 1. Securities. Section 2H includes shares, scrips, stocks, bonds, debentures, etc. Units of mutual funds or collective investment schemes. Derivatives, government securities, etc. Any other instrument declared by government as a security. Example, equity shares of Infosys, Government of India bonds, Nifty futures. 2. Contract. Section 2A. Any agreement between two parties to buy, sell or transfer securities. May be spot delivery or forward contract. 3. Spot delivery contract. Section 2I. Immediate settlement contract. Delivery and payment on the same or next day. Legal and valid contract under SCRA. Example. A sells 100 shares of TCS to B today, and both deliver pay today equals spot delivery. 4. Stock Exchange Section 2J. Any association, organization, or body of individuals providing facilities for trading in securities. Example. NSE, BSE, Calcutta Stock Exchange. 5. Recognized Stock Exchange Section 2F. A stock exchange granted recognition by the central government, now SEBI, under Section 4. Must follow SCRA provisions, rules, and bylaws. KeyCap 6. Government Security Section 2B. Securities created and issued by the central or state government to raise funds. Example. Treasury bills, dated securities. KeyCap 7. Derivative Section 2AC. A financial instrument whose value depends on an underlying asset, like shares, bonds, or indices. Example. Nifty Futures, Reliance Stock Options. KeyCap 8. Securities Appellate Tribunal SAT Section 2GB. A quasi-judicial body to hear appeals against SEBI or stock exchanges, decisions. KeyCap 9. Member Section 2C. A person who is admitted as a member of a recognized stock exchange. Recognition of stock exchanges. Application for recognition. Made under Section 3, in prescribed form to SEBI. Must include rules, bylaws, ownership details, and trading systems. Grant of recognition. Given by central government delegated to SEBI under Section 4. Conditions. Fair dealing, financial soundness, transparency. Recognition can be withdrawn for misconduct. Section 5. Withdrawal of recognition. If exchange fails to comply with conditions or acts against investor interest. Example. Delhi Stock Exchange recognition withdrawn due to inactivity. Powers conferred under SCRA. 1. Powers of central government. To call for periodical returns and direct inquiries. Section 6. To direct or make rules. Section 8. To supersede governing body of a recognized exchange. Section 11. To suspend business of exchange. Section 12. To prohibit contracts in certain cases. Section 16. To grant immunity. Section 23(o). To delegate powers. Section 29(a), 30. Example. Government can ban speculative contracts to prevent manipulation. Powers of recognized stock exchange. 1. To make rules restricting voting rights. Section 7(a). Prevents concentration of control in few members. 2. To make bylaws. Section 9(4). Admission removal of members. Trading regulations. Arbitration procedures. Settlement and clearing systems. 3. Must submit all bylaws to SEBI for approval. Powers of SEBI. 1. To make amend bylaws of recognized exchanges. Section 10. 2. To issue directions in investor interest. Section 12(a). 3. To make regulations. Section 31. 4. To adjudicate penalties. Section 23(i). 5. SEBI acts as primary regulator of stock exchanges and market participants. Public issue. When a company offers its securities to the public for the first time. IPO. Must comply with SEBI ICDR regulations, 2018. Listing on recognized stock exchange mandatory post-public issue. Listing of securities. Listing equals admission of securities on stock exchange for trading. Mandatory for public issues. Optional for private placements. Benefits. Liquidity, investor confidence, price discovery. Example. Infosys shares listed on NSE and BSE. Right of appeal. Appeal to central government. Against refusal by stock exchange to list a company's securities. Appeal to SAT. Available under Section 23L against SEBI or stock exchange orders. Appeal to Supreme Court. Against SAT's decision within 60 days. Right to legal representation. Parties may appear through advocates or authorized representatives before SAT. Penalties and procedures. 1. For failure to furnish returns or information. Up to 1 lakh rupees per day, max 1 crore rupees. 2. For failure to enter into valid contracts. Up to 1 crore rupees. 3. For manipulation or insider trading. Imprisonment up to 10 years or fine up to 25 crore rupees. 4. Adjudicating officer appointed by SEBI under Section 23I. 5. Settlement of cases under Section 23(o) to 23J via consent mechanism. Appeal to SAT. Established under Section 15T of SEBI Act. Headed by a presiding officer, retired High Court judge. Appeals must be filed within 45 days of SEBI order. Offenses. 1. Failure to comply with SCRA provisions. 2. Unrecognized stock exchange trading. 3. Manipulation, price rigging. 4. Publishing false statements to induce investment. 5. All offenses are compoundable under certain cases. Securities Contracts Regulation Rules, 1957 SCRR. Framed under Section 30 of SCRA. Provide detailed procedures for recognition, membership, and listing. Requirements for listing of securities. Rule 19. Rule 19.1. Securities offered to public must be listed on a recognized stock exchange. Rule 19.2. Minimum offer and public shareholding requirements. At least 10% of post-issue capital for large companies. 25% public shareholding for others. Rule 19.2b. Companies with less than 25% offer can be listed with conditions market cap is greater than or equal to 4,000 crore rupees. Conditions proceed into listing. 1. Minimum number of shareholders. 2. Minimum public shareholding. 3. Adequate disclosures in offer document. 4. Dematerialization of shares. 5. Payment of listing fees. Application for listing of new securities. Made in prescribed format to recognized exchange. Accompanied by prospectus, financial statements, and corporate documents. Subject to exchange scrutiny before approval. Suspension or withdrawal of admission. Exchange may suspend trading if company violates listing conditions, fails to pay fees, engages in fraud or misrepresentation. Withdrawal only after giving company an opportunity of being heard. Example. Suspension of Kingfisher Airlines shares due to non-compliance. Minimum shareholding. As per Rule 19A inserted 2010. Listed companies must maintain at least 25% public shareholding. Non-compliance leads to fines and trading restrictions. Additional important topics for CS exam. 1. Difference between SCRA, SEBI Act, and Companies Act. 2. Role of SAT versus NCLT. 3. Impact of dematerialization on contracts under SCRA. 4. Importance of spot delivery in avoiding illegal forward trading. Lesson 4. Securities and Exchange Board of India SEBI. Regulatory Framework 1. SEBI is the principal regulator of securities markets in India. 2. Established under the SEBI Act, 1992 to protect investor interests and promote market development. 3. Works alongside Securities Contracts Regulation Act, 1956 SCRA. Depositories Act, 1996. Companies Act, 2013. 4. Regulates issuers, intermediaries, investors, and market infrastructure institutions MIIs. 5. Operates under Ministry of Finance, Department of Economic Affairs. 6. Empowered to make regulations, conduct investigations, and impose penalties. Example: SEBI regulates IPOs, mutual funds, and insider trading. Introduction 1. SEBI was established in 1988 as an administrative body, given statutory powers in 1992. 2. Objective: to create a safe, efficient, and transparent capital market. 3. Headquarters: Mumbai, with regional offices in Delhi, Kolkata, Chennai, Ahmedabad. 4. Motto: to protect the interests of investors in securities and to promote the development of, and to regulate the securities market. 5. SEBI is known as the watchdog of Indian capital markets. Objectives of SEBI: 1. Protection of investors' interests. 2. Development of securities market. 3. Regulation of securities market and intermediaries. 4. To prevent fraudulent and unfair trade practices. 5. To promote fair disclosure in corporate governance. 6. To balance the interests of issuers and investors. 7. To ensure systemic stability and investor confidence. Example: SEBI introduced mandatory dematerialization to ensure transparency. SEBI Act, 1992. 1. Came into force on the 30th of January 1992. 2. Consists of 6 chapters and 35 sections. 3. Chapter 1. Preliminary, Chapter 2. Establishment of SEBI, Chapter 3. Powers and Functions, Chapter 4. Registration, Chapter 5. Penalties, Chapter 6. Miscellaneous. 4. The Act gives SEBI civil, quasi-judicial, and quasi-legislative powers. 5. Enables SEBI to regulate intermediaries, issue directions, conduct investigations, and enforce penalties. Management of the SEBI. 1. SEBI is a body corporate Section 3. 2. Composition Section 4. Chairman appointed by central government. 2 members from the Ministry of Finance. 1 member from RBI. 5 other members 3 whole time. 3. Tenure. 3. 5 years eligible for reappointment. 4. Head office in Mumbai. 5. Meetings conducted periodically. Decisions by majority. 6. SEBI may form advisory committees for specific market functions. Example: Madhabi Puri Book, current chairperson of SEBI, first woman head. Functions and powers of SEBI. SEBI performs 3 sets of functions. Quasi-legislative, makes regulations. Quasi-judicial, passes orders, penalties. Quasi-executive, conducts inspections, investigations. Functions of SEBI. Section 11(1). Regulate business in stock exchanges and other securities markets. 2. Register and regulate intermediaries, brokers, merchant bankers, etc. 3. Register and regulate mutual funds and collective investment schemes. 4. Promote and regulate self-regulatory organizations SROs. 5. Prohibit insider trading and fraudulent trade practices. 6. Educate investors and promote investor awareness. 7. Train intermediaries and promote research in securities market. 8. Regulate substantial acquisition and takeover of companies via takeover code. 9. Monitor corporate disclosures and compliance. Example: SEBI issued ICDR regulations for IPO process. Power of SEBI to regulate or prohibit issue of prospectus, offer document or advertisement. 1. Given under Section 11A of SEBI Act. 2. SEBI can regulate issue and content of prospectus and offer documents. 3. Ensures full and fair disclosure to investors. 4. Can prohibit misleading or fraudulent advertisements. 5. Issuers must follow SEBI ICDR regulations, 2018 for public issues. Example: SEBI can ban misleading IPO ads claiming guaranteed returns. Power to regulate collective investment schemes. 1. Defined under Section 11A. 2. Any scheme where funds from investors are pooled for a common purpose. 3. SEBI regulates such schemes to prevent fraud. 4. Registration under SEBI CIS regulations, 1999 is mandatory. Example: Sahara's unauthorized CIS led to landmark SEBI. Sahara case. Power to issue directions and levy penalty. 1. SEBI can issue directions to any entity or person under Section 11B. 2. Directions may include cease trading, refund of money, suspension of activities. 3. SEBI may impose monetary penalties under Chapter via. Example: SEBI banned insider traders and imposed penalties in Infosys case. Investigations. 1. Authorized under Section 11C. 2. SEBI may investigate insider trading, price manipulation, non-compliance of regulations. 3. Investigating officer can call for records, examine persons on oath, seize documents with court permission. 4. Reports are submitted to SEBI board for action. 5. Non-cooperation can attract penalties. Example: SEBI investigated Carvey stockbroking for misuse of client securities. Cease and desist proceedings. 1. Introduced by SEBI Amendment Act, 2002 Section 11D. 2. SEBI can direct any person to cease and desist from violating the law. 3. Issued where there is a risk of continuing or future violation. 4. Ensures prompt regulatory intervention without waiting for full investigation. Example, cease and desist orders against companies manipulating penny stocks. Power to make regulations 1. Under Section 30, SEBI can frame regulations consistent with SEBI Act. 2. Major regulations. SEBI ICDR Regulations, 2018. SEBI LODR Regulations, 2015. SEBI PIT Regulations, 2015. SEBI SAS Regulations, 2011. SEBI Intermediaries Regulations, 2008-3. Regulations are notified in the Official Gazette and are legally binding. Registration of intermediaries 1. Mandatory under Section 12 of SEBI Act. 2. Includes brokers, sub-brokers, merchant bankers, registrars, portfolio managers, etc. 3. SEBI ensures fit and proper criteria, capital adequacy, code of conduct compliance. 4. Registration can be suspended or cancelled for violations. Example, mutual fund distributors must register with SEBI via AMFI. Prohibition of manipulative and deceptive devices, insider trading, etc. 1. Prohibited under Section 12A of SEBI Act. 2. Covers insider trading, false or misleading statements, market manipulation, fraudulent devices. 3. Regulated by SEBI Prohibition of Insider Trading Regulations, 2015. Example, insider trading case. Reliance Industries 2021 penalty for futures manipulation. Penalties and adjudication. Penalties for failures 1. Failure to furnish information. 1 lakh rupees day max 1 crore rupees. 2. Failure to enter into valid agreements. Up to 1 crore rupees. 3. Failure to redress investor grievances. Up to 1 crore rupees. 4. Insider trading. Up to 25 crore rupees or 3x profit gained. 5. Fraudulent activities. Up to 10 crore rupees or 3x profit gained. Adjudication 1. Conducted by adjudicating officer AO appointed under Section 15I. 2. AO gives notice, conducts hearing, and imposes penalty. 3. SEBI board may review the order. Factors to be taken into account while adjudging quantum of penalty. Section 15J1. Amount of disproportionate gain or unfair advantage. 2. Loss caused to investors. 3. Repetitive nature of default. 4. Cooperation shown during inquiry. Settlement of administrative and civil proceedings 1. Under Section 15JB and SEBI Settlement Proceedings Regulations, 2018. 2. Allows violators to settle by paying a settlement amount without admission of guilt. 3. Helps save time and cost for both SEBI and entities. Example, NSE co-location case partially settled by consent. Recovery of amounts 1. SEBI can recover penalties as arrears of land revenue under Section 28A. 2. Methods. Attachment of bank accounts, property, or sale of assets. 3. Recovery officer appointed by SEBI. Continuance of proceedings 1. Proceedings can continue even if the offender ceases to exist, merger, dissolution, etc. 2. Liability passes to successors. Securities Appellate Tribunal SAT. Establishment Section 15K. Independent tribunal to hear appeals against SEBI or adjudicating officers. Composition. Presiding officer retired HC judge. 2 other members. Appeals. To be filed within 45 days of SEBI's order. Section 15T. SAT can confirm, modify, or set aside SEBI orders. Procedure and powers. Has powers of civil court summons, evidence, etc. Can award costs, direct refunds, etc. Legal representation. Parties may appear personally or through advocate. Limitation. Appeal must be filed within 45 days, extendable by another 45. Jurisdiction of civil court. Barred. Civil courts cannot entertain matters under SEBI Act. Appeal to Supreme Court. Lies under Section 15Z against SAT orders on substantial questions of law. Offenses. Section 24(1). Contravention of any SEBI Act provisions punishable with imprisonment up to 10 years, or fine up to 25 crore rupees, or both. 2. Cognizance of offense by court only on SEBI's complaints. Section 26. Establishment of special courts. Section 26A1. Designated courts for speedy trial of SEBI offenses. 2. Equivalent to sessions courts. Contravention by companies. Section 27(1). Both the company and responsible officers deemed guilty. 2. Liability can be avoided if due diligence is proved. Scores. SEBI Complaints Redress System 1. Scores equals SEBI Complaints Redress System online platform. 2. Launched in 2011 for transparent investor grievance handling. 3. Enables investors to lodge complaints online. 4. SEBI monitors resolution by companies' intermediaries. Direct Complaint 1. Investor can file complaint directly on www.scores.gov.in http. www.scores.gov.in or SEBI mobile app. 2. Requires PAN, ISIN, and details of the intermediary or company. Process for lodging complaint 1. Register on Scores right pointing arrow verify email right pointing arrow file complaint. 2. Complaint auto-forwarded to the concerned company. 3. Company must respond within 30 days. Timeline for lodging complaint. Complaint must be filed within 3 years of cause of action. One time, review, option. If not satisfied with company's response, investor can request SEBI review once. Complaints not dealt through Scores. Complaints related to unlisted companies, RTI queries, court sub judice matters, anonymous or incomplete complaints, Scores authentication, mandatory for intermediaries, MIIs, stock exchanges, depositories, and companies seeking listing. Handling of complaints by stock exchanges 1. Exchanges must ensure resolution before SEBI intervention. 2. If company fails, SEBI can impose penalties or suspend trading. Timelines and Circular of 2023 SEBI HOOIAEIGRDCIRP 2023-1561. Linked Scores with online dispute resolution ODR platform. 2. Enables faster and transparent grievance settlement. 3. Mandates escalation mechanism and fixed resolution timelines. Responsibilities of designated bodies. 1. Stock exchanges, depositories, and RTAs must monitor grievance redressal. 2. Must submit periodic reports to SEBI. General provisions for investor grievances. 1. Companies must have a dedicated investor relations officer. 2. Maintain records of complaints and resolutions. 3. Penalty for failure to redress grievances. SEBI Mobile Application 1. Enables investors to check complaint status, lodge new complaints, and access investor education materials. SEBI Informal Guidance Scheme, 2003. 1. Allows entities to seek SEBI's views on legal regulatory issues. 2. SEBI provides no action letters or interpretive letters. 3. Promotes compliance and reduces ambiguity. Confidentiality of request. 1. Applicants can request confidentiality. SEBI may withhold public disclosure. 2. However, SEBI's decision remains binding and public if cited later. Important for CS exam. Sections 11, 11A, 11B, 11C, 11D Core Powers. SAT Jurisdiction and Appeal Procedure. SEBI's Penalty Sections. 15A, 15HB. SEBI's Major Regulations ICDR, LODR, PIT, SAST, SIS. Scores plus SEBI Circular 2023 Updates. Lesson 5. Laws governing depositories and depository participants. Regulatory Framework. 1. The Depositories Act, 1996 governs the functioning of depositories in India. 2. SEBI Depositories and Participants Regulations, 2018 provide operational and compliance framework. 3. Key regulatory bodies. SEBI, RBI for government securities, and Ministry of Finance. 4. Each depository must be registered with SEBI under Section 3(1) of the Depositories Act. 5. The Companies Act, 2013 provisions especially Sections 88 and 89 apply to beneficial ownership. 6. NSDL and CDSL are the two SEBI-registered depositories in India. 7. The Depositories Act was introduced to support paperless trading and prevent fake share certificates. 8. It supplements the Securities Contracts Regulation Act, 1956 and the SEBI Act, 1992. Introduction. 1. Before 1996, shares were held in physical form, leading to delays, frauds, and loss of certificates. 2. The depository system introduced dematerialization (DEMAT), electronic ownership of securities. 3. A depository acts like a bank for securities, maintaining investor accounts electronically. 4. It eliminates issues like bad deliveries, theft, mutilation, or forgery of physical shares. 5. Facilitates faster transfer and settlement through T+1 or T+2 systems. 6. Examples. NSDL National Securities Depository Limited established in 1996 and CDSL Central Depository Services Limited. Established in 1999. 3. An overview of depository system. 1. Depository equals entity that holds securities of investors in dematerialized form. 2. Intermediaries. Depository, depository participant DP, issuer, and beneficial owner. 3. DEMAT system involves. Investor opens a DEMAT account with DP. Physical shares are converted to electronic form dematerialization. Trades are settled electronically. 4. Settlement cycle is T+1 trade date plus 1 day. 5. Enhances market efficiency, safety, and transparency. 6. Linked with stock exchanges for seamless trading and settlement. 4. Role of depository and its functions 146. 1. Holding securities in electronic form on behalf of investors. 2. Dematerialization and rematerialization of securities. 3. Settlement of trades through transfer of ownership in DEMAT accounts. 4. Corporate action processing bonus, dividend, rights issue, etc. directly in investors' accounts. 5. Nomination facility for investors. 6. Pledge hypothecation facility for securities. 7. Safeguarding investor interest through regulatory compliance. 8. Example. NSDL credits bonus shares automatically to investors' DEMAT account. 5. Bank. Depository analogy 146. Bank. Depository. Holds money. Holds securities. Account. Savings current. Account. DEMAT. Transfer funds. Transfer securities. Provides statement. Provides DEMAT holding statement. RBI regulates banks. SEBI regulates depositories. Example. Just as you deposit money in SBI, you hold shares in NSDL CDSL. 6. Difference between depository and custodian 146. Basis. Depository. Custodian. Role. Holds securities electronically. Physically holds securities for institutional investors, clients, retail and institutional, institutional FIIs, mutual funds. Regulation. Depositories Act, SEBI. SEBI Custodian of Securities. Regulations. Example. NSDL, CDSL. SBISG, HDFC Bank Custody. 7. Benefits of Depository System 146. 1. Elimination of physical certificates. 2. Immediate transfer of securities. 3. Reduction in paperwork and transaction cost. 4. Elimination of bad deliveries. 5. Faster settlement cycles T+1. 6. Increased liquidity in the market. 7. Reduced risk of theft or forgery. 8. Ease in corporate benefit distribution. 9. Simplified record keeping and portfolio monitoring. 8. Depository participant DP 147. 1. DP acts as an agent of the depository. 2. Investors must open a DEMAT account through DP to access the depository. 3. Examples. Banks HDFC, SBI, Brokers Zerodha, Angel One, Financial Institutions. 4. Regulated under SEBI Depositories and Participants Regulations, 2018. 5. DPs must have a unique DP ID and maintain KYC of clients. 6. Responsible for dematerialization requests, pledging, and updating corporate actions. 9. Issuer 148(1). The company issuing securities, equity, debentures, bonds. 2. It must sign an agreement with Depository for dematerialization facility. 3. Must inform Depository of any corporate actions. 4. Example, Reliance Industries Limited, as an issuer tied up with NSDL/CDSL. 10. Dematerialization 148(1). Process of converting physical share certificates into electronic form. 2. Investor submits DEMOT request form DRF with certificates to DP. 3. DP forwards it to the Depository and issuer RTA for verification. 4. Upon approval, shares are credited electronically to the investor's account. 5. No stamp duty is payable on DEMOT transfer. 6. Example, 100 physical shares of Infosys converted to electronic form via NSDL. 11. Rematerialization 149(1). Reverse of dematerialization, converting electronic holdings into physical certificates. 2. Investor submits a remat request form RRF to DP. 3. Depository intimates issuer to print and dispatch certificates. 4. Used rarely, mainly by investors preferring physical proof. 12. International Securities Identification Number ISIN 151. Unique 12-character alphanumeric code to identify securities. 2. Assigned by NSDL/CDSL under SEBI's guidance. 3. Example, INE 002A010118. Reliance Industries Limited. Equity share. 4. Helps track and trade securities globally. 13. DEMOT account opening process 151. Choose a SEBI-registered DP. 2. Fill account opening form with KYC documents. 3. Sign agreement and receive client ID. 4. Obtain DEMOT account number DP ID plus client ID. 5. Start transacting electronically. 14. Legal linkage 151. Depository system link legally with Companies Act, SCRA, and SEBI Act. 2. The Depositories Act defines legal ownership and beneficial ownership. 3. Section 10 of Depositories Act treats entries in the register as legal proof of ownership. 15. Electronic credit and new issues 151(1). During IPO or rights issue, allotments are credited directly to investors' DEMOT accounts. 2. Eliminates need for share certificates. 3. Example, IPO of LIC 2022 credited shares directly to DEMOT accounts. 16. Corporate actions 151(1). Include dividend, bonus, rights issue, stock split, etc. 2. Depository updates investors' DEMOT accounts automatically. 3. Ensures efficient distribution and transparency. 17. Depositories Act, 1996-1511. Came into force on the 20th of September 1995. 2. Provides legal framework for depositories. 3. Recognizes ownership of dematerialized securities. 4. Establishes rights and duties of depository, DP, issuer, and beneficial owner. 5. Empowers SEBI to regulate the system. 18. Important definitions 152. 153. Depository. Entity holding securities electronically NSDL, CDSL. Beneficial owner. Investor whose name appears in DP records. Participant. Agent of depository providing interface to investors. Issuer. Company issuing securities. 19. Certificate of Commencement of Business 152(1). Depository must obtain SEBI's certificate before starting operations. 2. Must comply with eligibility norms like net worth, technology, and infrastructure. 20. Eligibility conditions 152(1). Minimum net worth of 100 crore rupees. 2. Promoter's reputation and experience in finance. 3. Adequate computer systems, network, and risk management capacity. 21. Rights and obligations 152. 153(1). Depository. Maintain records, ensure integrity, and compensate losses due to negligence. 2. DP. Maintain confidentiality, KYC compliance, and investor grievance redressal. 3. Issuer. Facilitate DEMOT remat, corporate benefits, and reconciliation. 4. Beneficial owner. Responsible for account operations and transactions. 22. Fungibility 154(1). All shares of a company are interchangeable, no unique certificate numbers. 2. Ensures anonymity and ease of settlement. 3. Example, 100 Infosys shares held by 2 investors are indistinguishable in DEMOT form. 23. Register of beneficial owner 155(1). Maintained by depository as statutory record of ownership. 2. Equivalent to register of members under Companies Act. 24. Pledge or hypothecation 155(1). Investor can pledge DEMOT securities as collateral for loans. 2. Requires approval of both pledger and pledgee through depository system. 25. Penalties and adjudication 157. 159(1). SEBI can impose monetary penalties for non-compliance under Section 19H of the Act. 2. Offenses are cognizable under Section 22A. 3. Adjudicating officer appointed by SEBI under Section 23I. 4. Penalties include fines up to 1 crore rupees or more depending on violation. 26. SEBI Depositories and Participants Regulations, 2018-1621. Replaces earlier 1996 regulations. 2. Defines registration, eligibility, and compliance for DPs and depositories. 3. Provides for audit, cyber resilience, and investor protection. 4. Mandates periodic reconciliation and reporting to SEBI. 27. Reconciliation and audit 162. 163(1). Issuer must reconcile total shares with depository records monthly. 2. DPs undergo internal and concurrent audits by qualified professionals. 3. Annual audit reports to be submitted to SEBI and depository. 28. SEBI's Cybersecurity Framework 1641. Mandates DPs to have cyber resilience policy, data encryption, and regular penetration tests. 2. Ensures safety of investors' data and transactions. 29. Role of Company Secretary 164. 1. Liaison between issuer, depository, and SEBI. 2. Ensures reconciliation of share capital and audit compliance. 3. Advises board on SEBI compliance and corporate governance. 4. Handles investor grievances related to DMOT and transfer issues. 5. Plays key role in corporate actions and regulatory filings. Exam tips for CS Executive. Always quote section numbers for SEBI powers and definitions. Remember 2 depositories, NSDL and CDSL. ISIN full form, DMOT vs REMAT difference, and benefits are frequently asked. Be ready to write short notes on fungibility, beneficial owner, depository participant, corporate actions. Case law, National Securities Depository Limited vs. SEBI 2006, related to SEBI's regulatory power. Lesson 6, Securities Market Intermediaries. 1. Regulatory Framework 171. Intermediaries are key players linking investors, issuers, and the market infrastructure. 2. The SEBI Act, 1992, Securities Contracts Regulation Act, 1956, and Depositories Act, 1996 form the legal base. 3. The specific regulation is the SEBI Intermediaries Regulations, 2008. 4. Objective: ensure integrity, transparency, investor protection, and efficient functioning. 5. Every intermediary must be registered with SEBI before starting operations. 6. SEBI has powers to inspect, suspend, or cancel registration for violations. 7. Examples: merchant bankers, stockbrokers, DPs, credit rating agencies, research analysts, etc. 2. Introduction 171. Securities market intermediaries act as channels between issuers and investors. 2. They facilitate issue management, trading, clearing, settlement, and advisory. 3. Their conduct directly affects investor confidence and market stability. 4. All intermediaries must follow SEBI's Code of Conduct and comply with regulatory norms. 5. The 2008 regulations consolidated earlier rules for uniform oversight. 6. Examples: merchant bankers handle IPOs, stockbrokers execute trades, portfolio managers manage funds. 3. SEBI Intermediaries Regulations, 2008-1721. Introduced on the 26th of May 2008 to replace fragmented regulations. 2. Defines procedures for registration, obligations, inspection, disciplinary proceedings, and appeals. 3. SEBI can take actions such as warning, suspension, or cancellation of certificate. 4. Ensures fit and proper criteria for all intermediaries. 5. Establishes a common code of conduct and grievance redressal mechanism. 6. Appeals against SEBI's order lie with the Securities Appellate Tribunal SAT. 4. Registration of intermediaries 172-1. Mandatory for every intermediary under Regulation 3 of 2008 regulations. 2. Application made to SEBI in the prescribed form with fees. 3. SEBI checks fit and proper person criteria. Integrity, competence, financial soundness. 4. A certificate of registration is issued after approval. 5. Registration is permanent unless suspended or cancelled. 6. Any change in control or ownership requires SEBI's prior approval. 7. Example: Zerota stockbroker is registered with SEBI as IN000031633. 5. General obligations of intermediaries 175. A redressal of investor grievances. 1. Intermediaries must have an investor grievance redressal mechanism. 2. Complaints are handled through SCOR's SEBI complaints redress system. 3. Non-compliance can lead to suspension or monetary penalty. 4. Example: delay in refund post-IPO must be resolved within 30 days. B. Appointment of compliance officer. 1. Every intermediary must appoint a compliance officer to monitor regulatory adherence. 2. Officer acts as a link between intermediary and SEBI. 3. Reports any violation or irregularity immediately. See Investment Advice. 1. Intermediaries giving investment advice must be registered as investment advisors under SEBI Regulations, 2013. 2. Advice must be unbiased, suitable, and based on client risk profile. 3. Fee structure and conflict of interest must be disclosed. Decode of Conduct 176-1. Maintain high standards of integrity, fairness, and diligence. 2. Ensure confidentiality of client data. 3. Avoid conflicts of interest. 4. Example: a merchant banker cannot promote an IPO where he holds shares. 6. Regulatory Framework for Intermediaries 176. Intermediaries are regulated through 1. SEBI Intermediaries Regulations, 2008. 2. Specific SEBI regulations for each intermediary type. 3. Circulars, guidelines, and codes issued by SEBI. 4. Regular audits and inspections. 7. Merchant Banker 176-1. Merchant bankers manage public issues and IPOs. 2. Functions: due diligence, drafting prospectus, underwriting, issue pricing, and marketing. 3. Must register under SEBI Merchant Bankers Regulations, 1992. 4. Must have minimum net worth of 5 crore rupees Category I. 5. Example: AQism Securities, Axis Capital, SBI Capital Markets. 6. Ensure investor protection by proper disclosure in offer documents. 7. File due diligence certificate with SEBI before issue opening. 8. Registrars and share transfer agents RTA 178-1. Handle share transfer, transmission, dividend processing, and investor record maintenance. 2. Governed by SEBI R&T Agents Regulations, 1993. 3. 2 categories. Category I. Both registrar and share transfer agent. Category 2. Either registrar or share transfer agent. 4. Must ensure timely updates of ownership and corporate benefits. 5. Example. KFin Technologies, Lincoln Time India Private Limited. 6. Maintain investor records electronically linked with depositories. 9. Bankers to an issue 181. Collect application money from investors during IPO FPO. 2. Governed by SEBI bankers to an issue regulations, 1994. 3. Must maintain separate accounts for each issue. 4. Ensure funds are transferred promptly to the issuer. 5. Example. HDFC Bank, Axis Bank, ACC Bank. 6. Act as vital intermediaries for refund and ASBA applications supported by blocked amount system. 10. Debenture trustees 181-1. Protect interest of debenture holders. 2. Appointed under Section 71(5) of Companies Act, 2013 and SEBI Debenture Trustees Regulations, 1993. 3. Ensure issuer complies with terms of debenture trustee. 4. Take legal action if issuer defaults on repayment. 5. Example. Axis Trustee Services Limited, IDBI Trusteeship Services. 6. Must monitor asset cover, charge creation, and investor communication. 11. Stockbrokers 184-1. Licensed intermediary who executes buy-sell orders for investors. 2. Must be registered under SEBI Stockbrokers Regulations, 1992. 3. Must be a member of a recognized stock exchange. 4. Maintain client agreements, KYC, and separate client accounts. 5. Follow SEBI's Code of Conduct for Fair Dealing. 6. Example. Zerodha, Angel 1, Motilal Oswal. 7. Must report margins, trades, and daily settlements. 12. Portfolio Managers 186-1. Manage investment portfolios on behalf of clients. 2. Governed by SEBI Portfolio Managers Regulations, 2020. 3. Minimum net worth. 5 crore rupees. 4. 2 types. Discretionary and non-discretionary. 5. Must segregate client funds from own funds. 6. Provide periodic performance reports. 7. Example. Ask Wealth, Kotak PMS, Motilal Oswal PMS. 13. Custodians 189-1. Hold securities and manage transactions for institutional investors' mutual funds, FPIs. 2. Governed by SEBI Custodian of Securities Regulations, 1996. 3. Functions. Settlement, safekeeping, income collection, and corporate actions. 4. Example. HDFC Bank Custody, SBISG Global Securities. 5. Maintain detailed transaction records and ensure timely settlement. 14. Investment Advisors 191. Provide financial planning and investment recommendations. 2. Governed by SEBI Investment Advisors Regulations, 2013. 3. Must register with SEBI and follow fiduciary duty to clients. 4. Segregate advisory and distribution activities. 5. Minimum qualification. Postgraduate in finance or equivalent plus certification NISM. 6. Example. Fee-only SEBI registered advisors like PMS AIF World. 15. Research Analysts 192-1. Prepare and publish reports or recommendations on securities. 2. Governed by SEBI Research Analysts Regulations, 2014. 3. Ensure independence and transparency in research. 4. Must disclose conflict of interest, ownership in securities. 5. Example. Analysts at Motilal Oswal or CC Direct Research Team. 6. Protect investors from biased or misleading analysis. 16. Credit rating agencies 194-1. Assess creditworthiness of debt instruments and issuers. 2. Governed by SEBI Credit Rating Agencies Regulations, 1999. 3. Examples. CRISIL, ICRA, CARE, India Ratings. 4. Ratings range from AAA highest to D default. 5. Must disclose rating rationale in periodic review. 6. Misleading ratings attract SEBI penalties. 17. Depository 195-1. Holds securities in electronic form NSDL, CDSL. 2. Covered under Depositories Act, 1996. 3. Provides services like DAMOT, REMAT, pledge, and settlement. 4. Ensures integrity, security, and investor data protection. 5. Works closely with stock exchanges and RTAs. 18. Depository Participant 196-1. Interface between depository and investors. 2. Registered under SEBI Depositories and Participants Regulations, 2018. 3. Banks, brokers, and financial institutions can act as DPs. 4. Example. Zerodha DPID. Indiana 300095. 5. Provide DAMOT account services, pledging, and transfer facilities. 19. Foreign Portfolio Investor 196-1. Non-resident investors investing in Indian securities. 2. Governed by SEBI FPI Regulations, 2019. 3. Categorized as Category I, 2, and 3 based on risk and regulation. 4. Must register with a designated depository participant DDP. 5. Example, Norges Bank, Morgan Stanley Asia. 6. Must comply with FEMA and SEBI reporting norms. 20. Internal audit of intermediaries by company secretary in practice 200-1. SEBI mandates internal audit for intermediaries to ensure compliance. 2. Company secretaries in practice PCs are authorized to conduct such audits. 3. Verify adherence to SEBI regulations, client funds segregation, and grievance redressal. 4. Submit audit reports to SEBI or the concerned authority. 5. Example, audit of stockbrokers, portfolio managers, or DPs by PCs. Exam focus. Know at least 2. 3 examples per intermediary. Learn SEBI regulation names plus year highly testable. Understand fit and proper criteria, registration, and code of conduct. Expected questions. Discuss the role of merchant banker debenture trustee or explain obligations of intermediaries. Lesson 7. International Financial Services Centers Authority IFSCA. 1. Regulatory Framework Section Overview. Objective. To provide a single, unified authority to regulate financial services and institutions in International Financial Services Centers IFSCs in India. Statute. The International Financial Services Centers Authority Act, 2019. Jurisdiction. Initially applies to GIFT City Gujarat International Finance Tech City, Gandhinagar, Gujarat. Regulators unified under IFSCA. SEBI, RBI, IRDAI, and PFRDA. For entities operating in IFSC. Main aim, to promote ease of doing business and develop India as a global financial hub. Exam tip. A common 3-mark question asks. Which 4 regulators' powers are unified under IFSCA? 2. Background on capital market and securities sector in IFSC. Pre-IFSCA scenario. Multiple regulators made it cumbersome for entities to operate in IFSCs. Capital market activities in IFSC. Include stock exchanges, depositories, mutual funds, alternative investment funds AIFs, and foreign portfolio investments. Example. NSE IFSC and India INXBSE's International Exchange operate from GIFT City. Objective. To provide a global platform for raising capital in foreign currency. Benefit. Enables listing of foreign securities, masala bonds, depository receipts, and global ETFs. 3. International Financial Services Center Definition and Concept. Definition. An IFSC is a jurisdiction that provides financial services to non-residents and residents in foreign currency. Legal basis. Section 18(1) of the SEZ Act, 2005 allows setting up of an IFSC in a special economic zone. Functions. Hosting offshore banking, insurance, capital markets, and asset management services. Example. GIFT IFSC is India's first operational IFSC. Comparison. Similar to London Canary Wharf, Singapore, Dubai DIFC, and Hong Kong. 4. Importance of IFSCs. 1. Global financial hub. Attracts foreign capital and global players. 2. Ease of cross-border transactions. All operations are in foreign currency. 3. Job creation. Promotes high-skilled financial employment. 4. Financial innovation. Encourages fintech, digital banking, and sustainable finance. 5. Regulatory simplification. Single authority replaces fragmented oversight. 6. Foreign direct investment FDI. Simplifies investment inflow. 7. Tax incentives. Competitive tax regime compared to other global IFSCs. 8. Boost to rupee internationalization. Promotes Indian financial strength globally. 5. Fiscal benefits and tax exemptions for GIFT IFSC. 1. Tax holidays. 100% income tax exemption for 10 consecutive years out of 15 years. 2. GST relief. No GST on services provided to offshore clients. 3. Stamp duty exemption. Transactions in IFSC exempted from state stamp duties. 4. Capital gains tax relief. For specified securities listed on IFSC exchanges. 5. No dividend distribution tax DDT. Encourages fund domicile in IFSC. 6. MAT AMT at concessional rate. Minimum alternate tax at 9% for companies. 7. Customs and duties exemption. Imports for business use in IFSC are duty-free. 8. Example. AIFs Category 3 operating from IFSC get complete tax exemption on gains from overseas investments. 6. Necessity of IFSC for domestic economy. Avoid capital flight. Prevents Indian businesses from routing investments via Singapore, Dubai, or Mauritius. Enhances domestic competitiveness. Keeps Indian talent and funds within India. Improves forex reserves. Attracts foreign currency inflows. Supports startups and fintechs. Provides global funding access. Builds financial sovereignty. Reduces dependency on foreign jurisdictions. Example. Indian companies earlier listed GDRs in Luxembourg. Now can do it in GIFT City. 7. IFSC benefits for India. 1. Strengthens Indian financial system. Integrates with global markets. 2. Boosts capital market depth. Allows foreign listings, ETFs, and derivatives. 3. Employment opportunities. Finance, law, compliance, research. 4. Global recognition. India's first world-class financial district. 5. Enhances financial inclusion. Through innovation in financial instruments. 6. Bridges onshore-offshore divide. Enables Indian entities to compete globally. 7. Promotes fintech and green finance. Sandbox programs and sustainability bonds encouraged. 8. Example. IFSCA launched Fintech Incentive Scheme 2022 to attract startups. 8. International Financial Services Centers Authority IFSCA. Established. April 27, 2020, headquartered in Gandhinagar. Legal basis. IFSCA Act, 2019 came into force on December 19, 2019. Composition. 1. Chairperson. 2. 1 member each from RBI, SEBI, IRDAI, PFRDA. 3. 2 members nominated by the central government. 4. 2 whole-time members. Objective: develop and regulate financial services, products, and institutions in IFSC. Example: IFSCA regulates India INX and NSE IFSC. 9. Legal and regulatory framework in GIFT IFSC. Primary law, IFSCA Act, 2019. Supporting laws. Companies Act, FEMA, SEBI Regulations, and Income Tax Act is modified for IFSC. Operational framework. IFSCA issues its own regulations, e.g. Banking Regulations 2020, Insurance Intermediary Regulations 2021. IFSCA Capital Market Intermediaries Regulations, 2021. Cover stockbrokers, investment advisors, fund managers, etc. Example: all financial institutions in IFSC must register with IFSCA, not SEBI or RBI. 10. Powers and functions of the IFSCA Section 12 and 13 of the IFSCA Act, 2019. 1. Regulation and development. Regulate financial products, services, and institutions. 2. Authorization and registration. Grant, suspend, or cancel licenses. 3. Issue directions to entities for compliance and investor protection. 4. Inspection and inquiry. Conduct investigations into irregularities. 5. Promote innovation through fintech sandbox and regulatory sandbox. 6. Frame regulations. IFSCA issues regulations across capital markets, insurance, banking, and funds. 7. Cooperation with domestic and international regulators. 8. Example: IFSCA issued IFSCA Fund Management Regulations, 2022. 11. Powers of the Authority Section 13(1). Make regulations to carry out provisions of the Act. 2. Call for information from regulated entities. 3. Levy fees for services and registration. 4. Delegate powers to members or officers. 5. Adjudicate penalties for violations of IFSCA regulations. 6. Take measures for development, including research and investor education. 7. Impose monetary penalties for contraventions. 8. Example: suspension of a fund manager for non-compliance with disclosure rules. 12. Financial products and financial services. Financial products: securities, derivatives, insurance products, deposits, units of mutual funds, etc. Financial services: fund management, portfolio management, custodial services, banking, reinsurance, etc. Innovation: IFSCA allows cross-border fund structures and hybrid instruments. Example: euro-denominated debt instruments or offshore AIFs launched in IFSC. Key aim: attract global capital and expand financial innovation in India. 13. Listing and trading of securities in IFSC. 1. IFSC exchanges. India INX and NSE IFSC provide 22-hour trading. 2. Eligible securities: debt securities, depository receipts, derivatives, units of mutual funds, and ETFs. 3. Currency: all trades in foreign currency USD. 4. Issuers: both Indian and foreign companies. 5. Listing process: through IFSCA issuance and listing of securities regulations, 2021. 6. Clearing and settlement: done by IFSC Clearing Corporation in USD. 7. Tax benefits: exemption from capital gains for certain listed securities. 8. Example: bonds issued by the Asian Development Bank listed on India INX. Additional notes for CS exam. Important acts linked: IFSCA Act, 2019. SES Act, 2005. Companies Act, 2013 applicable with modifications. Short question topics. 1. Composition of IFSCA. 2. Powers under Section 13. 3. Benefits of GIFT IFSC. 4. Fiscal incentives under IFSCA.